Strap in, gearheads. This isn't just a policy shakeup, it's a full-throttle detour in global aviation. Your roadmap to the latest in auto? Welcome to Highway Herald, where we don't just report trends, we decode what drives them. In April 2025, Beijing fired back at Trump's 145% tariffs by halting all Boeing aircraft deliveries. The impact? Massive. With Boeing's China market in jeopardy, the ripple effects could slam supply chains, jobs, and global trade dynamics. Let's dive into the critical turns of this high-stakes aviation showdown. Boeing's turbulence in the Chinese skies. For years, Boeing's relationship with China has been like the smooth hum of a well-oiled inline-six, reliable, lucrative, and essential to the company's global success. Roughly 15% of Boeing's total commercial aircraft deliveries have historically gone to China, making it a market the company can't afford to lose. But in April 2025, that stability nosedived. The Chinese government instructed its domestic carriers to suspend all incoming Boeing aircraft, a retaliatory gut punch following America's tariff hike. It wasn't just symbolic. Aircraft already en route or in final delivery stages, like several Boeing 737 MAX jets, were either rerouted or flown back to U.S. soil. This move doesn't just stall new orders, it derails Boeing's entire operational rhythm. There are still over 130 outstanding aircraft orders from Chinese airlines. With those hanging in limbo, the revenue loss could easily hit the billions. But here's where it gets even more concerning. If this isn't resolved quickly, Boeing risks losing long-term market share in one of the world's fastest-growing aviation regions. And once those slots are filled by someone else, they don't reopen easily. But the damage doesn't stop with Boeing's international relations. Let's take a look at the ripple effects shaking the foundation of the American aerospace economy. Shockwaves through the industry and economy. Let's be clear, Boeing isn't just an aerospace manufacturer, it's the beating heart of an expansive industrial ecosystem. The company directly employs around 140,000 Americans and supports tens of thousands more through its intricate web of suppliers, avionics specialists, engine builders, and maintenance contractors. So when one of its largest international customers, China, slams the brakes on deliveries, the impact isn't isolated. Analysts are sounding the alarm. If this suspension drags on, it could trigger significant layoffs, especially in high-tech sectors like propulsion systems, electronic components, and aerostructures. Financially, the blow is massive. Boeing's Chinese business, spanning aircraft sales, parts, and services, brings in $10 to $12 billion annually. Without it, the company risks scaling back research, delaying new aircraft platforms, and weakening its edge in global competitiveness. And remember, Boeing is still climbing out of the crater left by the 737 MAX saga and pandemic-era disruptions. This trade conflict? It's like tossing gravel into the gearbox mid-flight. But zoom out, and the turbulence reveals a larger shift, where trade wars aren't just about tariffs anymore. They're strategic battlegrounds, and no industry, not even aviation, is flying above the fray. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now, let's see who's stepping up to fill Boeing's spot. Airbus and COMAC shift into higher gear. While Boeing's seatbelt light flashes, rivals are already climbing altitude. Airbus, the European aerospace heavyweight, has been revving its presence in China for years, thanks to its Tianjin final assembly plant and growing partnerships with regional airlines. In fact, just a month before this crisis, Taiwan's China Airlines locked in a purchase for 10 A351,000s, signaling strong confidence in Airbus's fleet. That's a clear indicator. The market is ready to pivot. Then there's COMAC, the homegrown Chinese aircraft manufacturer. Their C919 jet is no longer just a prototype. It's now aiming for 75 units annually by the end of 2025 and a whopping 200 by 2029. It's China's answer to the Boeing 737 and Airbus A320. With over 1,000 orders, mainly domestic, it's not just a project anymore, it's a movement. That said, COMAC still depends on Western-built engines and avionics, making it vulnerable to export controls. But even with these hurdles, both Airbus and COMAC are now poised to fill the vacuum Boeing may be forced to leave behind. Still, behind this market scramble lies a much deeper strategic game. Let's examine how this standoff fits into the broader U.S. China rivalry. Grounded by geopolitics, trade wars, strategic fallout. The freeze on Boeing deliveries is more than a snag in logistics. It's a high-altitude signal that the U.S. China trade war has entered full-blown strategic warfare. Every tariff, every export block now represents a deeper power play, a global contest between industrial sovereignty and economic dependence. By grounding Boeing jets, China isn't merely retaliating, it's strategically backing its homegrown aerospace contender, COMAC, while advancing its long-term vision of technological independence. It's a bold move that reinforces Beijing's ambition to wean off foreign reliance and dominate the skies on its own terms. For the United States, this is a harsh reality check. Boeing, once a shining symbol of global interconnectivity, now finds itself entangled in the messier side of geopolitics, where commercial ties can be snapped by policy shifts overnight. What once seemed like safe interdependence now feels like strategic vulnerability. And Boeing's not the only one in the turbulence. Industries from agriculture to tech are bracing for impact. As protectionism rises and supply chains fracture, corporations may need to ditch their borderless playbooks and prepare for an era defined by caution, adaptability, and homegrown resilience. That brings us to the final question. Can Boeing find a flight path through the storm, or will the turbulence force a permanent descent? Turbulent skies ahead. Can Boeing navigate the storm? As trade tensions escalate, world leaders and corporate strategists are scanning the skies for clearer paths ahead. A full-scale truce between the U.S. and China might feel distant, but there's still runway left for tactical diplomacy, especially in sectors like aviation, where mutual economic interests run deep. Short-term solutions could include carve-outs such as partial tariff rollbacks, bilateral agreements, or carefully negotiated joint ventures designed to stabilize fragile ties. These small but significant gestures could help reduce friction and prevent further economic freefall. But Boeing can't just throttle back and wait. The company must chart a proactive flight path, one focused on expanding into high-growth regions like Southeast Asia, Latin America, and Africa. These markets are preparing for an aviation boom, and Boeing must reduce its over-reliance on geopolitically sensitive partnerships. Diversifying its supply chain, investing in modular aircraft platforms, and fast-tracking advanced aviation tech are all essential strategies. Still, with both Washington and Beijing locked into hardened positions, resolution will only come when financial pressure outweighs political pride. Until then, Boeing must navigate headwinds in a global economy where politics and business now fly side by side. Final descent: Boeing versus Beijing, a high-stakes game of sky chess. This standoff between Boeing and China isn't just a layover, it's a full-on altitude battle. On one side, the U.S. aerospace giant, anchored by thousands of jobs and a sprawling global supply chain. On the other, a fast-rising superpower determined to dominate its own skies and steer the future of aviation on its terms. If Boeing loses long-term access to China, experts estimate up to $50 billion in market losses. But beyond the numbers lies a bigger shift, one that could tip the balance of global aviation for generations to come. Now we want to hear from you. Is Boeing's turbulence with China just a temporary stall? Or are we witnessing a full reroute of global aviation power? Do trade wars stifle innovation or force industries to grow stronger and smarter? If you were in Boeing's cockpit, what strategy would you plot? Diplomacy or diversification? Drop your thoughts in the comments. If you found this video insightful, be sure to subscribe to Highway Herald for the latest vehicle updates and in-depth analyses. Your support helps us bring you the best in automotive content. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.